Tuesday, October 2nd, 2018, Monaco 64, home of alternative economics and contrarian views. Things are heating up. Markets are getting very interesting. Italy, back in the spotlight. Oil price in the spotlight. And I want to talk about wealth inequality and how the present fiat money system is unsustainable and how it creates inequality. I'll touch upon a German economist from just after World War I, Gottfried Feder, and he talks about how the system of financialization just guts the economy and favors the very few. And and it's almost like he predicted what's happening nowadays. And before I start today, I'd like to say, if you are looking to buy precious metals, bullion, especially in the UK, go to the link below in the description. Go to goldinvestments.co.uk and use the promo code MONACO64. You get 0.5% discount. I highly recommend Gold Investments. I've been dealing with them for over 16 years. So it's 7:40 a.m., a little earlier than usual, but yeah, a lot to talk about today. So let's go to the markets. Right now, spot gold is up $5 at 1193.80. Range has been 1187.80 to 1195. That's the spot price, of course, not futures. Silver is up 9 at 1457. So up 0.2%, outperforming gold a little bit. Yesterday we gave up some of the gains from Friday. The range in silver 1461 to 1446. The Dow is down 73 points, 26,589. So still having a tough time breaking that all-time high. We're just below 26,600, down 0.25%. Range has been, well, we have been a little lower, but this is near the lows here. The S&P future is down 7 or 0.25%, 2917. NASDAQ 100 future also down about 0.25%. Currency-wise, dollar is doing well this morning, actually. And in spite of that, precious metals are firmer, which is encouraging again. Cable is 130.10, down 0.25%. The euro is down 1/3% at 115.40. Dollars down slightly against the yen, 0.1%. Dollars down slightly against the yuan nominally. Oil, well, this is getting very interesting. We're really breaking out in both WTI and in Brent. It started yesterday. WTI now at 75.75, up 0.2%. Look at this chart of the oil. It's a breakout. Of course, it could correct back down, but the trend looks higher. Brent, the same thing. We're trading above 85 now, up 0.25%. Look at the charts. So the big story this morning, in my opinion, in terms of the market, is Italy. We're continuing to see the yields go higher in Italy. So right now, let's have a look. 10-year yield is at 340. The other thing the Italians look at that's very important is the spread between the German the Italian 10-year yield and the German 10-year yield. It shows how much in trouble Italy is. So right now, that spread, I'm calculating it right here, is at 296 basis points. And this is how important that level is. So I'll show you the spread. This is from from Il Sole 24 Ore, which is an Italian financial newspaper. You can see that there's the chart of the spread. Earlier this year, in late May, we went up to around 304. And right now, we're just below that 300. That's not updated, that chart, but we are at 296. If we break through that late May high, we need to brace ourselves to maybe some turbulence in all markets worldwide. And why is it a problem for Italy? Well, the problem for Italy is that I spoke about this about a month or 6 weeks ago, I don't remember exactly. A lot of the debt sales that the Italian Treasury has to do, they've got most of it to do in the last quarter of the year. So with interest rates going up, and you'll see why it's important when I talk about wealth inequality in a minute. With interest rates going up, it's going to make it even worse. Italy is heavily indebted. I think their debt to GDP is somewhere about 130%, maybe even more. I'm not sure, but it's not good. And the other thing as well, it's not good for the banks. Why? Well, because of the banks. I was listening to a professor of economics in Italy yesterday, talking to a reporter, and he said the banks hold a lot of the banks' balance sheets. Their assets are government bonds. So if interest rates are going up and their asset prices are going down, because when bond rates go up, prices go down, they can't lend as much. So that's the problem. So let's have a look at what the Italian markets are doing. So you see here, the Italy 40 is down almost 1%. As you can see from the chart, we're almost at key levels here of support for the year. So not looking very good. So that's Italy. Oil prices, of course, are very important. We saw yesterday the 10-year yield actually go up to 309 from around 304 earlier in the day. That's the US. Oil prices are so important for the whole economy. And it could be, oil prices in Italy could be what triggers some kind of crisis. So we need to keep an eye on it. Today, though, the 10-year yields dropped a little bit to 306, but still quite elevated. So I want to talk about fiat money and how it creates inequality. I personally think that the solution is in the monetary system. Redistribution of wealth is not the solution, in my opinion. So how unequal is the economy? Well, look at this article here. This is from The Guardian, so very mainstream, January 2016, and it's probably gotten worse. Richest 62 people as wealthy as half of world's population, says Oxfam. Charity says only higher wages, crack down on tax dodging, and higher investment in public services can stop divide widening. Oh, I say rubbish. That's not the way to stop wealth inequality. The way to do it is to stop fractional reserve banking and stop allowing bankers and central banks to create money out of thin air and charge interest on it. And this was touched upon by German economist Gottfried Feder back in 1919, when he wrote the Manifesto for the Abolition of Enslavement to Interest on Money. As he say, he gives some really good examples why this system leads to a complete destruction of the real economy and the enrichment of the very few, which is what we're getting. So he uses this and I quote, "The charming story of the invention of the game of chess is well known. The rich Indian king Shriram granted to the inventor, as thanks for the invention of the royal game, the fulfillment of a wish. The wish of the wise man was that the king should give him 1 grain of wheat on the first square of the chess game, 2 on the second, 4 on the third, and thus always on each square twice as many as on the one before. The king smiled at the seemingly modest wish of the wise man and ordered that a sack of wheat be brought so that for every square the grains of wheat could be apportioned. As we all know, the fulfillment of this wish was impossible even for the richest prince in the world. All the world's harvest in 1,000 years would not suffice to fill the 64 squares of the chessboard." So there you go. that's what happens with it's all about maths and all about the bankers being able to create debt out of thin air and charge interest on it. So do you understand why now they need to keep interest rates so low? Because the higher the interest rates, the quicker the system implodes and destroys the economy. And another example, let's give another example. One more example, many will still remember from their school days, the torture of calculating compound interest. How the penny invested at the time of the birth of Christ multiplies at compound interest so that it doubles every 15 years. In the year 15, after the birth of Christ, the penny has grown into 2 pennies. In the year 30 AD to 4 pennies. In the year 45 AD to 8 pennies, and so on. Very few will remember that the value of this penny would represent today a volume of gold equivalent to the volume of the Earth, the Sun, and all the planets combined would not be adequate to represent the value of this penny invested at compound interest. So that's the whole problem with inequality. The people who control the system, this system where you can create money out of thin air and charge interest on it, it engulfs, or it's parasitical. It's because the real economy cannot grow exponentially as this fake monetary system. So what else does he talk about? Well, he compares, for example, and this is from late 19th century, early 19th century, he compares how industrial companies don't grow as quickly as the banking houses. And he uses the Rothschilds as an example, and he uses Krupp, which is a huge industrial German company. And then he also and he shows how the growth is fairly steady in the beginning, and then it's just goes exponential, and this is not even to scale. He says that the Rothschild curve, for example, is a lot higher than the Krupp curve. So that's why we got the wealth inequality. That's why if you look at global debt versus GDP since the early 70s, it's been growing a lot more than the real GDP. And actually they add GDP, they add all this financial activity to GDP, so it could be even worse if they only added the real economy. Well, look at this. This has come out also this year. This is from CNBC in July. Global debt hits a new record at 247 trillion. Debt to GDP ratio of the world has exceeded 318%, marking its first quarterly rise in 2 years. So that's the problem with rising interest rates in this system. So the other point he makes is that he's not against capital nor labor. He thinks capital and labor should both work together, and I agree with him. He says it cannot be emphasized enough that the recognition of the mathematical laws that loan capital and industrial capital follow alone show us the clear path where the levers to be applied for setting aright our wrecked finance economy. We recognize clearly that not the capitalistic economic order, nor capital in itself, and as such, is the scourge of humanity. And he goes on to say that insatiable interest need of big loan capital is the curse of all laboring humanity. And then he goes on to say capital must be, labor must be, labor alone can do little, capital alone can do nothing. So there you go. To all those who have these different ideas about redistributing wealth, making the world more equal, there's, that's at the root of the problem, the fractional reserve system where banks can charge money out of thin air and create that out of thin air. It's not gonna, redistributing wealth, taxing the rich will not do it. It will not correct it. Until we correct that, things are gonna remain as they are. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, BitTube, and on Twitter. I'll talk to you later. Take care. Bye.